The pandemic brought a lot of financial struggles for many, yet oddly enough, the demand for luxury goods skyrocketed. By 2023, the luxury market was valued at $254 billion, and experts predict it'll reach $370 billion by 2030. Crazy, right? What's even more surprising is that luxury isn't just for the super rich anymore. Around 27% of regular luxury buyers earn less than $50,000 a year. Let's dive into some of the clever strategies they use. Spoiler, it's not just about fancy stores or personalized emails. Take Hermes, for example. Their Birkin bags are legendary, not just for their price, which starts at $10,000 and can go way over $200,000, but for how hard they are to get. They're limited in supply, and there's even a waiting list. By making them rare, Hermes makes people want them more. Another great example, Supreme. They drop small, limited edition collections of clothes and accessories. This creates a frenzy of demand, and prices often shoot way above market value. The scarcity not only elevates the perceived value, but creates an air of exclusivity that makes owning these items feel like an achievement. Scarcity isn't just about physical goods. It applies to experiences too. Think about high-end restaurants with months-long waiting lists or luxury resorts with limited bookings. When something feels out of reach, we want it even more, convincing ourselves that the struggle to obtain it makes it more rewarding. To keep the illusion of rarity alive, some brands destroy unsold products instead of discounting them. Yep, you heard that right. Burberry admitted to burning millions worth of unsold stock, until they stopped after public backlash in 2018. Louis Vuitton is also rumored to destroy leftover items, ensuring their products never hit the bargain bin. Why? To maintain their high-end image and keep prices sky high. From a business standpoint, this strategy reinforces the exclusivity of their goods by ensuring that they're not associated with discounts or affordability. This practice highlights the fine balance between supply and demand in luxury markets. Too much availability dilutes the prestige of a brand, while too little risks alienating even the most loyal customers. Yet, many companies bet on the former, sacrificing potential profits in the short term to sustain their long-term image. Luxury brands love partnering with celebrities to create an emotional connection. For example, Dior works with stars like Rihanna, making fans feel like owning a Dior bag or dress brings them closer to their idols. Gucci is another great example. Their $700 Ace sneakers are a hit, partly because they're heavily promoted by celebs and influencers. The message is clear: wearing Gucci means you've made it. This strategy ties the product to aspirational lifestyles, making it more desirable for consumers eager to emulate their favorite stars. The influence of celebrities goes beyond mere endorsements. They help to frame the narrative around a brand, positioning it as part of a specific cultural moment or movement. For instance, when a celebrity wears a luxury item to a high-profile event, it cements the brand's association with glamour, status, and success. Brands like Rolex don't just sell watches, they sell a story. Owning a Rolex is marketed as a symbol of success, prestige, and exclusivity. Their Submariner and Daytona models, for instance, are linked to explorers, athletes, and business leaders. That association drives up their appeal and their price. A Rolex Submariner starts at $10,000, with rare models going for $40,000 or more. Consumers don't just buy a watch, they buy into the narrative of accomplishment and adventure. Other brands adopt similar tactics, weaving elaborate histories and cultural significance around their products. Champagne houses like Dom Pérignon, for example, don't just market their beverages as sparkling wine, they position them as essential elements of celebration and luxury living. Believe it or not, some luxury brands count on aloof or even rude behavior from their sales staff to boost sales. As Brenda Cronin wrote in the Wall Street Journal, arrogant customer service is a powerful driver of luxury sales. Research by Darren Dahl and Morgan Ward found that when premium store employees act dismissive, it often pushes customers to buy. Why? To prove they belong in the elite circle. However, this isn't a foolproof tactic. As Dahl notes, the best approach for luxury brands is quality service. While snobbishness might prompt impulse buys, in the long run, it can harm a brand's reputation and customer loyalty. Still, the strategy works in part because luxury shoppers aren't just buying a product, they're buying validation. Being acknowledged as part of an exclusive group, even begrudgingly, satisfies a deep psychological need. Ever heard of Tiffany's little blue box? It's iconic. People don't just buy the jewelry, they buy the whole experience. That box is a status symbol in itself. For example, Tiffany diamond rings can cost over $10,000, but customers feel they're getting more than a ring. They're buying romance, exclusivity, and a sense of accomplishment. Packaging like this transforms the product into something symbolic, adding layers of emotional value that far exceed its material worth. The luxury packaging game has expanded in recent years. Brands now focus on eco-friendly designs or reusable materials, blending prestige with modern values. The box or bag itself becomes a keepsake, a constant reminder of the experience and the brand behind it. Luxury brands charge ridiculously high prices to create an aura of exclusivity. For instance, Louis Vuitton bags can cost anywhere from $1,000 to $5,000. Why? Because people associate higher prices with better quality and status. There's even a famous story about a small jewelry store. The owner wanted to clear out some turquoise jewelry and left a note for her employee to discount it by 50%. The employee misread the note and doubled the price instead. When the owner returned, all the jewelry had sold. Turns out the higher price made it seem more valuable. This pricing strategy taps into a broader principle. We value what we perceive as rare or difficult to obtain. When brands price their items astronomically high, it reinforces their narrative of exclusivity and reinforces the idea that not everyone can have it. Labels like Made in Italy or Made in France carry weight. Even when parts of a product are made elsewhere, that label gives it an air of craftsmanship and tradition. It's a clever way to elevate a brand's image and justify high prices. Consumers romanticize the idea of artisanal goods from these regions, even if the reality is mass production. The perception of authenticity, however, is enough to drive sales. Some brands, such as Bottega Veneta, capitalize on the rich heritage of Italian craftsmanship, investing in storytelling to highlight the meticulous process behind their goods. This reinforces their image as timeless and sophisticated. Some brands market their goods as investment. Hermes bags, Rolex watches, and Chanel items are often touted as assets that hold or even increase in value. And while that's true for rare items, most luxury goods aren't as liquid as stocks or real estate. Still, the idea of owning something that might appreciate in value adds to the appeal. It makes people feel they're not just spending, they're investing in their future. This narrative appeals to a growing audience of younger buyers who view luxury not just as a splurge, but as a strategic choice, blending indulgence with financial sensibility. Luxury brands tap into deep psychological needs. Here's why we get hooked. We're irrational. Many people buy luxury items they can't afford. US consumer debt hit a record $1.129 trillion in late 2023, showing just how far people will go for the allure of luxury. We crave status. Owning luxury items boosts self-esteem, especially for those who feel they're out of reach. We want to belong. Luxury brands create an illusion of exclusivity, and we want in. We love attention. Posting luxury items on social media is a way to signal success and impress others. Scarcity works. Limited editions and rare items trigger our FOMO, fear of missing out. We believe in the quality myth. Luxury marketing convinces us these items are inherently superior, even if that's not always true. While luxury might boost confidence, it can also create problems. It hides insecurity and fuels a need for external validation. The thrill of buying fades quickly, leaving you wanting more. Focusing on status can lead to shallow relationships and even loneliness. Buying luxury isn't inherently bad, it's about the why. If it brings you joy and you can afford it, go for it. But if it's driven by insecurity or the need to impress others, it might be worth rethinking. At the end of the day, happiness doesn't come from a label. It comes from how you live your life.